Hey, what is up? Today we are going to talk about investing in stocks versus investing in real estate. What's that? Stocks? Well, I prepared socks versus real estate. I mean, real estate's a clear winner there. Okay, I guess we're going to talk about stocks versus real estate. Roll that intro. Hey guys, what is up? Today we are going to talk about the pros and cons of investing in stocks versus investing in real estate, and we've got some stuff to get through. So let's get going. Now, one of the nicest thing about stocks is that they are super passive and super accessible. So what I mean by that is within, a couple minutes you can go online, set up an account and buy some stocks. And then you can just forget about it for 50 years and retire. Super passive, you don't have to think about it. It's kind of one of the nicest things about stocks is that it's so easy to get into and you can just kind of set it and forget it. You could also do this with real estate. You could passively invest in real estate, but at that point it kind of looks more like a stock. So you might invest in like a REIT or a real estate investment trust, or you might invest in a syndication deal, something like that, where you're giving some investors some funds and you reap a return at the end of the project. One of the biggest downsides, one of the biggest cons I see with stocks is the lack of control. Let's think about this. If you invest in a stock, how much control do you have over the stock market, over the manager that's managing that fund, or over the CEO that is controlling that company? Virtually none. Now, when it comes to real estate, you have much more control. Real estate, while some people might view it as a passive investment, and in some ways it can be, it is more of an active investment. It takes a little more legwork, a little more knowledge, but the benefit, the upside of owning real estate is that you have much more control. There are really 7 things where you have more control over real estate than stocks. Number 1, location. You have the control to buy in a location that makes sense for you. Number 2, you can add value to real estate. How can you do this? Let's just say you buy a single family home, rundown property, and it needs a lot of work. You can put a new roof on, put new siding on, paint it, put in new cabinets, new fixtures, new paint, new carpet, new flooring, and you have an asset that's actually really nice right now. You just forced some appreciation and some potential demand for that real estate. Number 3, you basically control what tenant you put into your property. So if you have a rental property or an apartment building, you basically control who gets to go into your property and who sends you that monthly rent check. Now, of course, there are fair housing laws and you have to abide by those, but you can be super picky about who you're letting into your property. One of their number 1 mistakes when it comes to rental property investing is they take the first applicant that comes along with a pulse, because they don't want any vacancy. Now, I think this is a huge mistake, and it's really important to vet many applicants to make sure you're getting the right fit for your property, and you want to find the best tenant possible. It will save you so many headaches in the future. Number 4, you control the rent. You set the price for rent for your house, townhouse, condo, apartment building, whatever it is. Now, it's gonna have to be in line with broader market rents. People are smart, they're not gonna overpay for something, but a lot of investors make the mistake of not checking on these numbers and they underprice the asset. So make sure that you know what your market rents are, bring your rents up to that market rent. That is something that you control directly. Number 5 is management. You have control over management of the property, whether it is yourself or a professional property manager. You have control of how the property is managed. So a good property manager will make sure that everything is running efficiently, that you've got good tenants in there, that all the financials are being reported, that all the checks are getting cut to the right account, all that stuff. A good property manager, whether it's you or a property management company, will make sure that the asset is running smoothly and efficiently. Number 6, you have control over the sale of the property. You can decide when you want to sell, if you want to sell at all. You might wait for the right time in the market cycle when it's a seller's market, and then you can sell that asset. And number 7, tax benefits. There are some huge tax benefits available to real estate investors. I am not a CPA, I am not an accountant, I am not an attorney, so I can't speak to all the ins and outs of this, but you've got things like depreciation and many other things at your disposal where you can pay very little to no taxes legally, completely legitly when you own rental properties. So consult with your CPA. All right, let's talk about the downsides to real estate. I see 3 things as downsides to investing in real estate, and here they are. Number 1, it is capital intensive. It can take a lot of money to invest in real estate deals. Not so when you're, looking to buy some stocks. You can have $100, start investing in some stocks or an index fund. $100 is not going to get you very far in real estate. Number 2, there is a learning curve, and I think this is not talked about a whole lot, but when it comes to real estate, even though this is an asset class a lot of people think they know because everyone's lived in an apartment or a home, they have a general knowledge of what it is. There is a learning curve when it comes to buying, rehabbing, managing properties. And number 3, it takes a lot more time to buy and sell real estate. It could take months to find a deal. It could take months to sell a deal. And so these timelines, if you need the money now, it's not really going to be easy to do. Now, I want to paint a little picture here. Let's just say that you want to invest in stocks. You've got $20,000. You go to your local bank and you talk to the manager and say, hey, I've got $20,000. I want to invest in stocks. They're like, sure, we'll get you set up with a brokerage account and you can invest in stocks. Let's get this going. So you sit down, you open up an account and you say, great, I would like to invest $100,000 in XYZ company. The manager will look at you and be like, you gave us $20,000, you can invest $20,000 in that company. And then you say, well, I want to invest $100,000. Can you guys loan me $80,000 to buy $100,000 of a certain stock? The manager is going to look at you and probably escort you off the property. It's very difficult to find someone to lend you money to invest in stocks. Some people at the highest levels can do this, but for the average Joe, you or me, this is probably not the case. Now, consider real estate. You might have $20,000. You want to invest in real estate. You can go to a bank. You'd be like, look, there's this $100,000 condo I want to buy. I've got $20,000 as a down payment. Let's get this ball rolling. They'll look at you and say, sure, we'll loan you the $80,000 on it and let's get started. Much easier to get leverage on property than it is to get on stocks. Likewise, if you're looking for private investors for a property, you can go to them. And I mean, if you ask your friend or your family member, can I borrow $100,000 to invest in the stock market? They're going to say no. But if you ask for $100,000 from them to invest in a property, they might be a little more ready to invest with you because it's an asset class, again, that everyone knows and understands. I think my 2 biggest takeaways with stocks versus real estate is, where does your passion lie? Are you really interested in the markets? Do you think you have an edge there in some way, whether it's with information, patience, could be a number of factors. Maybe you're going to be better at investing in the stock market. Maybe that is more the vehicle for you. But hey, if you are passionate about real estate and it's something that really interests you, I think that should be an indicator to you that real estate investing might be a better fit. And number 2, I think it boils down a little bit to your personality. It's really important to be self-aware when it comes to investing money, especially large sums of money. Are you impulsive? If that's the case, and that is certainly me, I think real estate is a better, safer play for you because, like I said before, it takes longer to buy and sell real estate. It's harder to be impulsive with real estate. Whereas a stock, if you have an online brokerage account, or you can just make a phone call to your broker, you can say, hey, let's buy or sell this, and it might be the wrong time. If you're impulsive and you're following the masses, listening to everything that's on TV or the internet about a certain asset, you might buy and sell at the wrong time. So I think real estate offers someone who's impulsive or not as patient a little bit of protection because it kind of forces you to be in that asset for a longer amount of time and should garner you more success over the long term. Feel free to subscribe if you haven't already, like this video, and we will see you in the next one. Later.